welcome. You're watching The Money Show and I'm Kavita Thapliyal. In a major overhaul, the government has simplified India's GST structure, moving from a complex four-slab system to just two key rates, 18% and 5%. Products that earlier attracted 28% and 12% GST will now be taxed at these lower rates, offering immediate relief to consumers and a likely boost to overall demand. Now, the changes cover a wide range of essentials from personal care products like shampoo, hair oil and toothpaste, now down to 5% GST, to dairy items like butter and ghee, also reduced to 5%. Even health and life insurance premiums have been fully exempted from GST. A welcome move for middle-class households. In the auto sector, small cars, two-wheeler under 350cc and three-wheelers now fall under 18% GST, down from 28%. Now, ACs, large TVs also get cheaper, with GST reduced from 28% to 18%. Now, at first glance, it's good news for everyone, farmers, low-income groups to the middle class alike. But here's the catch. Consumption in India is growing faster than income. That's exactly right, what you've heard. Data shows household incomes haven't significantly risen in past 27 years. Household debt is at a record high, while physical savings are at a 4 years low. And yet, India's consumption loan portfolio grew at 14.5% year-on-year in Q1 FY26, touching 105.6 trillion. Now, this spike is led by gold loans, up a sharp 34.6%, followed by two-wheeler and auto loans, interestingly. Personal loan growth has slowed to 8.7% year-on-year. So, what does this mean for you, the consumer, the saver, and the investor? So all you have to do is just stay with us today, because we are going to break all of this down for you and help you understand the trends and obviously make smarter choices with your money, whether you are spending, borrowing, or saving. I have with me... All right, so I also have with me our experts on the show today. I have Adil Shetty from Bank Bazaar, and I have Mahavir Chopra from Basic Insurance. Hi, good evening and welcome to the show. All right, so let's begin with you, Adil. And my first question is definitely the GST relief means more shopping and more buying, but then looking at the consumption story over here. So on one end, we are talking about a boost to consumption. Rural demand is good. Urban demand was anyways catching up. We will see a lot of spending happening in the festive season. But look at the other side of consumption, which is slightly tricky, since the income has not grown since last 27 years now.
You're right. So let's consider both points that you raised. One is this GST cut is going to leave more money in household hands, right? So let's assume that on household goods, we've seen the rate being cut to 5%. So depending on the good, on average, your tax outgoes 10% less. So you're spending 20,000 a month on, your edible oil, on your meat, on your toothpaste, toothbrush, right? You're going to save 10% of that. That's 2,000 rupees a month or 24,000 rupees per year. And like this, we can build different examples. If you're buying a TV, potentially you're spending 10% less. If you're buying a car, another 10% less. And your insurance, right? Let's say you're spending 20,000 on insurance, life insurance. Previously, you would have paid 3,600 as GST. Now we'll see how it pans out, but we expect that 3,600 will be saved. So broadly, we will see, 20, 30,000 rupees back in household hands on an annualized basis. But now let's come to the other side of the question. Income have not been going up so quickly, right? And people's debt levels are increasing. Now, two things to note, right? One is, I feel that if you look at outstanding debt, private debt to GDP in India, it's still less than half of what it is in most OECD or developed countries. We need to give a lot of MSMEs more access to credit. A lot of people need to buy more homes, get their first homes going. Home loans have to increase. So I don't believe India is at a stage where we can stop giving credit to people. People need credit to grow in their businesses, in their personal lives. That being said, right, I think incomes have to increase. We've got to see how to help our MSMEs. We've got to see how to use, technology, the India stack, to reduce the cost of doing business. We've got to see how to push demand, right, for the products that various companies are producing. So there's no easy solution, Kavita. I think today was a good day to put back, 20, 30,000 rupees in every households' hand every year by cutting GST. But yes, a lot more needs to be done, right, to make sure that people can improve the quality of their lives over the next 10 years.
Absolutely. We'll talk more on this, but then Mahavir, health and life insurance premiums are now GST free, a significant move. How do you look at it? And also, just try and help our viewers understand the industry and companies' perspective also.
So I think all the efforts that people have taken to make the government become aware of the fact that 18% GST was a big burden, specifically on senior citizens. Kavita, we have also spoken multiple times on this. Kudos to all the awareness work that you have also done to ensure that this kind of an initiative actually has taken reality. The key impact, of course, is that the premiums will reduce from 22nd September 2025 onwards. Largely, there is a discussion that is going on in how insurance companies are going to use the input tax credit. That is going to depend on largely how insurers have and what kind of capacity an insurance company has in terms of collecting GST beyond individual health insurance and beyond individual life insurance. So the companies which would continue to have GST collections through car insurance or in the life insurance space through basically group life insurance or group health insurance, those companies will still have enough GST collections for them to not have the problem of the input credit being basically transferred to the customer, right? So those companies will see the best amount of outcomes in terms of this reduction in GST that has happened from 18 to 0. And companies which typically have focused only on individual health insurance in the general insurance side, and companies which have focused only on individual life insurance in the life insurance side, definitely will see lesser outcome for the customer in terms of reduction in premiums. So it would be on a scale of 10 to 15% advantage that the customer should get in terms of the calculations that I have done since the morning today.
Right. So, more on this because I really want to understand how much of a push will this give to lower and middle income groups to buy insurance actively. But before that, Adil, I also want to understand, since we are talking about this being a relief, is this relief truly translating into financial ease for an average Indian? How are we looking at it? Because since the savings are at multi-year low, are people really borrowing out of need or habit?
Good question, Kavita. It's something we get asked at Bank Bazaar often. See, I definitely feel that given this GST benefit, more people are going to start thinking about taking that insurance policy, right? Because like we just heard, while the GST is reduced by 18%, we'll see where the final number settles once all the calculations on input credit are done. And similarly, for all the other goods, something similar will pay out, right? So on toothbrush and toothpaste, the cut might be 13%, but they're also going to look into the same input credit issue. And maybe what effectively will be a price increase will be smaller than that. So while the GST cut might be 13%, the transfer to the consumer might be 8, 9, 10%. We'll wait for September 22nd to see how all of that plays out. Now, I do believe that one other thing the Indian economy really needs to push at, right? There's a lot of talk about GST reform, but there is a chance for digital policy reform also. Now, today, right, everyone knows, the kind of process that one needs to go through when you do a KYC, right? When you have to open an account, when you have to claim some kind of benefit, or when you're claiming the payout on or the claim on an insurance. I think there's an incredible opportunity, like we've simplified GST and said, hey, I'm putting back tens of thousands of rupees in the average household's hand, right? If we truly want to reform India, we need to look at digital policy reform. I think we need to make things like privacy clear. We need to make things like the KYC process faster. We need to make sure that people have security, that we're able to control fraud, use digital public infra to do that better. So I think this is one step GST is done. Like you said, I think people should not overextend. So just because the price of something is cut, right? I shouldn't go and just buy it or take a loan and buy it or swipe my card. See, credit is a tool, right? And let's be clear, GST on the processing fee of loan, GST on the fees on card, the interest on card, that GST remains constant at 18%. That hasn't changed. Now, credit is a tool. Can you use it wisely to grow your business? Can you use it wisely to get an education, to get a home loan, to get benefits on your credit card spend? I think people still need to continue to be prudent. Just because your GST is cut doesn't mean you can go crazy. Absolutely not. You can't. But as long as you're aware, you make use of this 20, 30,000 rupees saving, you put that saving in an SIP, I think what the government has done today is absolutely wonderful for the Indian consumer.
Right. And the similar kind of mindset, Mahavir, I really want to understand, because buying insurance again is a mindset issue. Yes, after COVID, we did see people, paying attention to their health insurance coverage and life insurance coverage. But having said that, just because it's GST free, do you think it will really push people, especially the middle class and lower income group, to buy insurance? Are we talking about a deeper penetration now? Are we talking about more awareness about insurance product just because it's GST free?
A very big relief, right? Specifically in the health insurance space, where premiums have been increasing every year, and we've been talking about hikes in insurance premiums in the health insurance space almost since COVID has happened, right? So this, it definitely is a welcome sign for customers. Specifically for renewals, I think that this is going to help a lot. Senior citizen customers who basically thought of not, continuing their policies could see this as a good relief, because for them it was 18% was almost, for a, let's say, a 50,000 rupees premium was another 9,000 rupees that they had to pay from their pocket. So renewals are definitely going to become better, is what I feel. For the new customers, obviously there are two sets of customers. One is basically someone who was on the was thinking of buying a policy but was delaying it for some reasons, and this premium difference could actually give a short-term push in basically people wanting to buy health insurance quicker. But like what Adil said, right, the longer term issues, which is basically solving for trust, solving for grievances, solving for the issues that solve for trust, if they don't get solved, typically you don't see that we don't see a very big uptick in increase of people buying health insurance or life insurance in the future. I think the trust problem needs to be solved, and for that to be solved, like what Adil said, the processes, the claim payments, everything needs to be smoothened. And that's when customers actually will feel more confident to buy these products.
All right, so the time is right, and right for the right reasons in terms of your savings, your spendings, and also looking at your insurance. I think my time is up for this particular discussion, but then thank you so much, both of you, for taking time out and helping our viewers navigate these benefits of GST cuts and the way they can look at their spends and manage their financial portfolio and life. But then we move on.